This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on September the 2nd, 2011 at 8:44 in the morning Mountain. That's 10:44 Eastern. Our radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a radio show, would like to hear it again, go to Harold's website, HESradio.com, HESradio.com. The shows are archived there. Lots of other good information there as well. As we tape this show this morning, the job numbers came out in the United States, and as expected, they were terrible. In fact, no jobs were added. The unemployment rate in the United States stayed the same at 9.1. U.S. President Barack Obama will speak next week about the job situation. He's had about 3 years to deal with it. We'll see what rabbit he pulls out of his hat. Obviously, the other politicians are under pressure as well, as in 2012, there will be elections. Harold, on the news this morning, gold and silver are skyrocketing. A lot of people believe that some sort of quantitative easing or some sort of break to get the economy and get the job market going again is definitely in the cards somewhere down the line.
Oh, it better be, because, again, things are not looking good in the U.S. economy, and that's for sure. It's a long weekend this weekend, so the markets are a little bit thinly traded, but look at what's happening on Friday. The markets have gone crazy. Gold is up 52.20. We're trading right now just at $1,877. We're basically $20 below the $1,900 level. It looks like we're going to have a very strong year-end rally in gold and silver. In fact, we're up 52.20 as we're doing the show. In the last 30 days, we're up $216.50 in gold, and for the year, we're up $626. Not too shabby. We're looking fabulous in the precious metals. The silver market is up substantially. We're up about $1.50 today, so we're looking great, and we broke the $43 level. We're trading as high as $43.09. In fact, as we're taping the show right now, we're on the highs of the day. I'd like to see the market in silver break above $44, which is no big deal. I think we're going to retest the $50 level by the end of this year, and there are buy orders in the futures market above $50. When those get hit, you'll see the market make a quick jump and possibly end up the year at $55, $58. So, again, we're very, very excited about what's happening in the hard asset market. Gold, silver, and diamonds are absolutely skyrocketing, and those are the markets that you should be in. We're going to head into probably the most dangerous and frightening times in 2012. I'm not trying to scare anybody, but the fact is that the U.S. economy is faltering tremendously. They're basically bankrupt. In September, this month, they've got to come up with a budget, otherwise the government is going to close down. That means that the military is not going to be paid, and government workers aren't going to be paid, and certain projects are not going to go through, and, it's a horrible situation. If that was happening with my company, I would be working 24 hours a day. I would not be taking 6 weeks vacation and sitting back on the beaches doing whatever when the country is failing. So basically, I just don't understand where these politicians are at. They're taking a 6-week vacation. Obama is bebopping around the country on his private jets and all that, while the country is in total shambles. They owe $15 trillion, most of it to China. There's no way in the world that they can pay that debt back. There's just no way. And the fear of default is something that, could be catastrophic to the United States and the world economies, because let's face it, almost every economy is based off of what is happening in the United States. So it's a frightening situation. And the risks in the market are tremendous. And I cannot emphasize this enough, that going into 2012, we could see one of the worst financial markets you've ever seen. First of all, the markets that will continue to respond are gold, silver, and diamonds. We're nowhere close to the tops in those markets. Gold has no top. Gold could easily end up the year at $2,200 this year. It could easily hit $2,800 next year. And it could easily go to $4,000 to $5,000 or higher over the next 4 to 5 years. Because the real reason that you want to be in gold and silver is because of the upcoming inflation. And we know that we have severe inflation. It's just that obviously the government numbers aren't showing it. But all you have to do is go to the grocery store, to the gas station, and you know how inflation is affecting you. The thing is that when inflation is here, what needs to be done is a stronger dollar. So the U.S. should be actually raising their interest rates right now, but they're not going to do that. In fact, the Federal Reserve has come out and said that they're not going to raise interest rates till 2013 at least. That means that we have at least 2 years of money making in the gold and silver market, because as they continue to weaken the U.S. dollar, which will happen because of two things. One, by keeping interest rates at zero, and then number two, the fact that they are not going to deal with inflation, and you've got that quantitative easing 3 probably coming out very, very soon, which is going to hurt the dollar even more, which will push gold up to the levels that we anticipate. The other thing that you've got to be very conscious of, and again, this is extremely important, if your money is sitting in the stock market, if you're sitting in paper assets right now, you're basically sitting in investments and investing in stocks in a country, if you're investing in U.S. companies, that is basically on the verge of bankruptcy. It makes absolutely no sense to do that. There's a potential crash in the market coming in October. I say potential because you never know what they're going to do to support the market. And if it doesn't happen in October, there's an excellent chance it'll happen in the first quarter of next year. The fact is that there are so few reasons to invest in stocks at this particular point. If you're sitting in the stock market or mutual funds, my strongest suggestion to you is to sell it and go into cash and sit on the sidelines. You should be sitting with part of your money right now in gold and silver. Obviously, those are the two markets that are reflecting what's happening in the world economy. Gold is hitting record highs almost every week. Silver is about to break $50 again and go on to hit record numbers. And the fact is that you don't invest in stocks when a country is going bankrupt. It makes absolutely no sense in which to do so, because again, the risk is astronomical. I would much rather see you sitting in cash, not making any money, than have your money sitting in the risky stock market, because if it falls again, which every indication is that it's going to, the chances are you're not going to make it back again. You know, in 2008, when the Dow dropped from 14,000 to 6,500, you know, the U.S. government put in trillions of dollars back into the economy, and that's what brought the markets back up, brought them back up from 6,500 to about 12,500. But now the market's on the verge of collapse again. We saw a 2,000-point drop in 1 month, and the fact is that you don't invest in stocks in a country that's going bankrupt. It makes absolutely no sense. So the smart thing to do would be to take the risk off the table. Again, you're not going to make any money in the money market funds or keeping your money in cash, but you're not going to lose it either. I would suggest you put 25% of your money into gold and silver, and I very strongly recommend you get a hard asset like a diamond, and then keep some cash on hand, because cash will be king, and you will need some cash on hand to take advantage of undervalued assets. But the fear of being in a market like a mutual fund or in a stock in a country that's on the verge of bankruptcy makes absolutely no sense. And again, I urge you to understand what's going on at this particular point and take the risk off the table. You're much better off holding on and preserving your capital than taking a chance of losing it, because there's basically no upside. With no growth coming, there's no upside potential. The other thing is again, we have to deal with inflation. And by not raising interest rates for the next 2 years, what it's going to force the United States and other countries to do that don't follow suit is to deal with hyperinflation. Because at that point, by keeping interest rates at zero, first of all, you got to go back into history and look at what's happening with Japan. Japan's been in a recession for almost 20 years now. And the fact is that the United States seems to be following the exact same path that Japan did, and it didn't work for Japan. There's no way it's going to work for the United States. So all in all, we're going to head into the last quarter of this year, which is extremely bullish for hard assets, gold and silver. We anticipate the gold will break 2,000 and possibly end the year at 2,200. We think that silver is going to attempt the $50 level again. There's buy orders above $50. If we break 50, we could be looking at $58 possible by the end of this year, and very strong going into the first quarter of next year. As far as the U.S. dollar, I anticipate it will continue to fall, and as long as the U.S. dollar keeps on falling, you're going to see that the gold market and the silver market will continue to rally. It's an action-reaction type of situation. Low dollar, strong gold, and once the U.S. dollar breaks 71.50, which is a key support level for the U.S. dollar, once that price is broken, you could literally see the U.S. dollar free fall. The only way that the U.S. dollar is going to regain strength again is by raising interest rates, and they're not going to do that for at least 2 years. Once they realize why they need to raise interest rates, and they're not concerned about the short term, but concerned about the long term, they'll do the right thing. It's going to be with a different president, though, and basically we're going to have to see interest rates rise, and it's not going to be just a couple basis points. It's going to be substantial, because the inflation that's going to come from this particular situation is going to be the most extreme inflation that you and I have ever been through. I'm very, very concerned about the outlook for the U.S. economy and the world economy. And again, we're on alert because, again, it may not feel like it at this point because you still go to restaurants and you still are going on vacations and things like that, and people are still spending money. But the bottom line is that you can feel that it's really getting to change, and it's going to be an abrupt change. So we really need to be on alert. We need to do the smart thing, and we need to be very, very conservative in this type of market without taking speculative risks. You need to own gold. You need to own silver. You need to own a diamond, and we'll talk about that in the second half of the show. And you definitely have to get out of your paper assets, sit in some cash, and you're going to find that you're going to sleep a lot better at night, because basically with the risk you have in the market in mutual funds and stocks, if we get the third plummet in the market in this decade, the chances are you will never, ever make that money back again. Let's be smart about this. 90% of the money is made by 10% of the people. At this particular point, the people that listen to our radio show are in very, very good shape. We're the alternative investment people. The fact is that we've been recommending gold and silver for 10 years now when nobody even thought of investing in gold and silver, and we brought the same thing to you in diamonds. The fact is that money can be made if you're in the right situation. And I salute everybody and congratulate all of our listeners that took our advice over the years and got into these markets. I know it wasn't the easiest decision, and you had to go against your financial advisor, but those that did it, congratulations, and you're reaping tremendous benefits. And this is really only the start of it. The level that we can go to in gold and silver is absolutely limitless, because we've never, ever seen a financial situation like we're in right now and that we're going to go into for the next 4 to 5 years.
The telephone number to invest in precious metals, 1-866-623-2002. Harold recommends that you deal with a company out of Western Canada, a Canadian company in business for over 10 years, Worldwide Precious Metals. Their website is wwpmc.com, wwpmc.com. The telephone number to speak with them about investing in precious metals, 1-866-623-2002, 1-866-623-2002. When it comes to the money, the capital that you have, now is the time to include precious metals for profit and protection in your portfolio, the allocation that you have in your money base. That obviously protects you against a falling U.S. dollar, inflation, deflation, the current recession, financial crisis, and geopolitical turmoil. One thing we're seeing in the United States is a very poor job market. Also, the housing market is in complete chaos. These things are not going to be changing anytime soon. If you don't have an allocation of precious metals as an insurance policy in your portfolio, now's the time to take a serious look at it. Call Worldwide, 1-866-623-2002, the website wwpmc.com. This week, Jay LaForge and Shay Norbaum from Ned Davis Research wrote an article, and I thought it was quite interesting. We have it in our newsletter. If you'd like to receive our newsletter, you can speak with Worldwide. They'll be happy to send it out to you free of charge. They said gold's bull run reflects a lack of trust and credibility in governments and central banks worldwide to stop printing paper money at will. We believe this is because gold continues to rise versus every currency we track, developed countries and commodity currencies alike. Until governments start enacting more sound money policies, gold should continue to rise. Gold's ultimate demise will come when confidence in paper currency returns, which forecast is not today. Obviously, that's something that people have to understand. We are in a time now where, yes, hard assets are king due to the fact that governments, central banks around the world are treating paper assets like confetti. UBS came out this week. 3-month price target on gold, $2,100 per ounce. Societe Generale SOGEN raised its average gold price forecast to $19.50 an ounce for the fourth quarter of 2011 and an average of $22.75 per ounce for next year.